Hey everybody, it's Thursday the 24th. When you follow a system, a strategy, a methodology, you'll oftentimes, find yourself questioning it. For instance, yesterday and the day before, you might have questioned, hey, well, this market's ripping higher. Why aren't we involved in the cues? Why aren't we involved in the SPY? But if you, again, listen to the message of the market and don't break your rules, don't chase things, don't give in to FOMO, it starts to make sense a couple days later often, and sometimes the market will just continue in the direction that you missed out on. Then that's the way it can go. But what we're most interested in is what's most likely to occur. That's why we have rules of engagement and focus heavily on risk management. And in the case of COUR, we got involved at $15.95. We took that first third off with a gain of 20 cents, which again, often feels like we're giving the stock away. The second third, we took a gain with 84 cents, and then we're stopped at the balance today at 16.64 for a gain of 69 cents per share. On average, we made 57 cents. That's 3.7%. And to me, it looks like it's probably going to pull back. It's had a nice run in here recently. We're done with it. We've taken our gains. Time to move on. Let it be other people's problems. Same with ACMR. We got involved at $13.90 per share. Took a third off with a gain of 25 cents, another third with a gain of $2.40, and the balance was stopped out at $15.69 today for a gain of $1.89 on that third. Overall, we gained an average of $1.51 or 11%, and we're done with it. And maybe in a year it's going to be up at $18 per share. Maybe in a month, maybe tomorrow. I'm looking at it and saying it just made lower highs and lower low. It made lower lows most important, and that's our signal to get out. It's not based on 2%, 5%, or whatever else you've been taught in the past. The point is that it's about getting in and getting out with your gains. That's the goal of swing trading. That's my specialty. That's why I don't give investment advice. I tell people if you're an investor, maybe you're still going to be involved in this stop trade with a stop down here. I'm not interested in following this stock any longer because the message of the market has changed. It's my job to listen to the message of the market, interpret it correctly to you, and that's my goal each and every day. In the case of NAT, we're involved here at 422. We want to take some off at 430 or greater, and right now we're risking just 5 cents per share versus our original stop of 15 cents. So if that's too much for you, then our stop at 417, maybe look to get out break even tomorrow if you're not a believer in it. Otherwise, you trust the process and you say, hey, the stop's at 417. That's what I'm going to give it to. Or you override the system and, say, maybe the market overall is just too risky and I don't feel like being involved. Maybe that's the way you want to look at AROC. AROC, this one, if you're involved at 1255, looking to take a third off at 13 or greater. And the stop in there is 1228. Some of you might be buying this because they pay a 60-cent dividend, 5%, and it's got a good chart. To me, it doesn't make sense to buy for a dividend because, next thing you know, it's going to be down here. You're going to sell it. You're never going to get a dividend, and then you're going to just hate the stock. And anyways, if you're involved in it, I'm still suggesting that you keep your stop in the same place, which is $12.28 per share. Textron, if you got involved in this one today, as I mentioned in the midday video, you wanted to get out of a third of it up at daily R2. That was right here, and that was good for a gain of 60 cents per share. And what I suggested was a stop on the balance of break even on those other 2/3 share. So basically, overall, buying here at 70 75.85 and taking 60 cents off and then getting out of the rest at break even means you made on average 20 cents per share. And it's not about making 20 cents per share, obviously. It's about making sure that when we get in, we aren't complacent and just say, hey, I bought it, it has to go up. I'm going to say I'm taking a little bit off, just like we did 20 cents off in COUR, 25 cents in ACMR, because it allowed the overall profit to be maintained. Again, not that we're going to get rich off of this, but if you're going to get involved in a stock, you want to make sure you're not getting all those paper cut losses and just, and never raising your stop. The original stop was recommended down here, and it's most likely going to undercut that tomorrow. So we're done with Textron as well. Now for some ideas to keep an eye on tomorrow, I think it's time to go back to the well in shares of Crocs for another short sale. Let's take a look at the weekly time frame. Again, we're stuck below the anchored VWAP from that low down there, and we've got a declining 10, 20, 30, 40-week moving average. This prior support was broken, and it just is a garbage looking stock getting ready to, for a much larger decline, on that weekly time frame. This is clearly, you've got to look at it like this. This is stage one. It had a stage two. The moving averages started across stage three. We broke the low of stage three. Now we're in stage four. No different than, it entered officially a stage four over here. This was stage three up in here, and this was a beautiful stage two uptrend. Listen to the message of the market. It's telling us what we need to do. So in this case, we saw that, tomorrow the 5-day moving average will be rising. So I don't want to be too early on this, and certainly you can see on that last half hour of the day, it dropped down pretty good. So, again, this would be a lower tier idea. We have a catalyst tomorrow, I'm told, with the Jackson Hole event. And maybe that is an event that the market cares about. Maybe it's not. What I'd like to see, though, is a rally up and then to short it if it breaks below, ideally stays below the second day, 2-day VWAP, and then breaks below tomorrow's VWAP. I'd really like to short it right there. But again, with smaller size, because that 5-day moving average is rising and will be tomorrow. So, it's what we've got. This is, from what I see, one of the better opportunities out there. It doesn't mean it's the best opportunity. If you get involved in this, then I would suggest your stop goes at $97.53. That's just a few pennies above this little consolidation high right here. FOUR is another one that we've looked at on the short side before. It broke. I don't think we got involved in it, but it's broken down pretty strong here on the weekly time frame. And again, what stage? This was stage one accumulation. It looked like a big stage two markup that maybe was going to go up to here. This is why I'm not an investor. Instead, here we saw stage three distribution, stage two uptrend, stage four decline, stage one accumulation, stage two uptrend, stage three distribution. It breaks below the low of that. We're in a stage four decline. It's guilty till proven innocent. You've got to be stupid to buy a stock like this. I'm going to be that blunt about it because it's in a downtrend. Forget about their fundamentals and what they do. Institutions are selling this stock aggressively. Maybe it goes up, but it's not likely, not with a declining 20 and 50-day moving average. The 200 is still rising, but this one, again, as a lower tiered short sale, I think you could probably just short this one below this little low right here of 54.16 and then set your stop at $55.90 just above here. So shorting it below this low right here, stop up at 55.90, and who knows, maybe it gets the snot kicked out of it. Maybe the market is going to free fall, and this could be an A to B, B to C, and C to D like this. That's possible. It's not a projection, it's a scenario, and that's all I'm ever trying to do is understand what the most likely scenario is and enter the trade and manage risk and let the market take care of the rest. Focus on the process. ICE, we've traded this one a couple times on the long side, and on that weekly time frame, this is one I'd said to people over here, it looks like if you're looking for an investment, maybe this is a stock to invest in. But look at this. I don't know if that actually occurred, but man, that's got to really shake your confidence right there on a day like that if you're an investor. We were in right, we traded this one. I think we missed this one right here we missed this one. We traded this one and this one, and now it's maybe getting ready to go again, although probably not tomorrow. It showed some good relative strength here the last couple days, but it's a little bit extended, especially in this market. Maybe it needs to pull back down to that low, and in a couple days, see that 5-day moving average catch up to it. But it's one worth keeping an eye on. Mobileye still looks like a piece of garbage stock to me. And again, the fundamentals aren't there. I know a lot of people look at this stock and they think it's a growth company and all that, but we've discussed it previously. The fundamentals are not good for this stock. Don't believe the hype that, hey, it's just, self-driving technology. It's in a stage 4 decline. We had a longer term stage 3 accumulation. Stage 4 decline began over here. We got shorted right in this area, I believe, maybe even on that day or this day, I forgot. And had a nice trade out of it. It rallied up, found supply at the declining 5-day moving average. Now this one I'd like to see rally up maybe in a day or two, and then decline, maybe short it somewhere in here. So keep an eye on Mobileye. It looks like it's getting ready to continue its decline. Match, not ready for a purchase. And again, I'll point out, as I like to, the personality of the stock. Look at how the stock opens most days on a gap. And again, you've got to be an idiot to be involved on the open in a stock like this. Understand it's not always wait 5 minutes, wait 10 minutes. Some stocks tell you wait an hour. To me, it tells me, it probably doesn't suit my personality, but if something's going on in here that, for some reason it starts to set up a little bit better, I want to just have this one on my radar, maybe set an alert at about 45.50 and not really think about it, but just, if it maybe 45.30 even, I would, if for whatever reason it starts bucking the trend tomorrow and, it does this, then maybe I'm going to look at it, and if it, it's got a nice higher low on Monday and I buy it right here, maybe that's the good trade. Just because it has a funky personality doesn't mean I won't trade it, but I know what I want out of it. Again, you can, think of all these things. I've been happily married for a while, but you can think of them as dating. Yeah, she's a little bit crazy, but there's other things that I like about her personality that, it's okay to spend some time with her, whatever it is, whatever you need to help understand it. The shares of Pfgc on the weekly time frame, we've got this longer term base right in here where we've got these higher lows, and some people will call this an ascending triangle, and great, that's wonderful. But when we again look at the personality of the stock, does it do a whole lot typically, or does it spend a lot of time doing nothing? In the last 2 years, it certainly has. Although it can't trade, here it's doing nothing, but it has a nice trend, beautiful trend in here, nice trend over there. So it's capable of trending. But, just based on the personality of the last couple of years, it tells me don't get too excited about it. I mean, it's a food company. It's not really that exciting of a growth play. But they just reported earnings. It gapped up. It's, fighting to hold on there. The 5-day moving average is declining. Here's one just to kind of keep on your radar.